All right. Well, thankfully in withholding, there's not a lot of changes. Most of our forms and schedules haven't had any changes. Of course, as Mary Beth has said before, line one allowances are up to 2,775 and line two allowances are 1,000. All right. A couple new WIT credits here. We've got reimagining energy and vehicles, which is a little unique. This one is split between business and withholding. There's a note in the instructions that was just put in there a little while ago. It says only the amount of the credit that is equal to incremental income tax attributable to new employees and retained employees may claim against withholding a tax. That just means whatever the training cost of the new employee is allowable in against withholding, and all the rest would be bit credit. So the good folks at DCEO should be able to split that up for you, hopefully, and issue you the right certificates. There's a couple other live theater production tax credit that goes to any nonprofit theater production, and being awarded a certificate from DCEO, and the local journalism sustainability tax credit, uh, propping up local news organizations by awarding them tax credits there through DCEO as well. And with that, that's pretty much all for withholding. We can move on to business, please. Again, apologize for the technical issues. All right, go ahead and move on past. Mm-hmm. No, it's not. Okay. Well, apparently our slideshows are going to crawl a little bit today. Again, here is $12.99. Any of the new, I just went back to business income. Any of the new $12.99 credits as listed by the corresponding public acts, if as soon as it comes back up, hopefully. Okay, here we go again. Uh, This is again reimagining energy and vehicles, the REV Illinois credit. It's the same as it has been over the last couple of years, and the REV construction job credit, except for that split with withholding. Credit code there is 5240 and 5250. PA 102700 that created the micro investment tax credit. It's 5830. Manufacturer Illinois chips for real opportunity, micro Illinois credit, and micro construction job credit. And then we have 10308, that's the able contributions, and 10309 and preservation credit. It's been extended. The able contribution has been extended to 1/1 of 28, and preservation credits have been extended to 12/31 of 28. We've got 103,592. It used to be wages paid to ex-felons credit, 5380. It's now renamed to wages paid to returning citizens. Pretty much this is really the only impact there. And PA 103595, which is quantum computing campuses tax credit, which gives you the music and musicians tax credit 5680 and the research and development credit 5340, which are all see, music and musicians is effective January 1st, 2025. Research and development goes out to December 31st of 2031. So expiring credits, if we can get to that slide. This is just the agritourism liability insurance and invest in kids. As soon as it gets there, I apologize again. As Mary Beth discussed, invest in kids it has expired as of 1/1 of 24, and agritourism is 12/31 of 2023. Again, you can still see them on the 1299s as credit carry forwards. All right, if we can move to the next slide, please. These are all the 2024 schedules without major changes. As you can see, we've got most of them there. So we're not in for a lot of changes this year. If we can move forward, please. Our first change here on the Illinois 477. I'm waiting for the slides here. Guess it's time for a coffee break while we do. There's only one major change here. Major change to that 477 was we added a checkbox there. Primarily, the credit was only allowed for credits that was placed in the service prior to 2019, and it's just a checkbox to attest to that. We can move forward to the NLD and UB NLD, please. Again, not to preview and ruin the excitement, but there's not a lot of changes here. There's a year reference change and some footer updates. And we've added the new $500,000 NLD cap references throughout. Right. Next slide, please. This is just a list of the returns without major changes. The only one that's suspiciously missing is 1065, which we'll talk about a little bit later. If you can move to the next slide, please. And we're going to talk about Public Act 103, 592 here. This is financial organizations. There's a change in the instructions, updated financial organizations on page 20 to reflect the 103, 592 changes. It just changes the formula there for how you calculate income based off of the financial organizations. All right, moving on to the next slide, throwback sales. This was just added back to the instructions. I apologize for crawling today. This was just added back to the instructions, and I think it was because of some letter rulings that are out there from the first of this year, and in relation to some of the discussions with the new legislation that may be on the horizon federally. So this is the same throwback and double throwback definition that we've had in place for years. So it's just added back into the instructions for reference. We move to the next slide, please. All right, there's a new step break that's been added to 1065's 1120 STs and their amended cohorts. The new step break was added to the net replacement tax line there to accommodate investment partnerships. So next slide, please. Oh, they're having problems with slides, seeing them even out in the real world here. I guess they're back. Yeah, I should be on K1P4 instructions. Okay. All right. So K1P4 instructions are now located in K1P1, just to follow along with all the rest of the instructions. All the other instructions for K1P is located in the K1P1s. So the standalone K1P4 instructions have been moved. All right. Next, please. Hmm. Long pauses. Dramatic effect for anybody that's out there. K1P4 modification worksheets. That's been added into the K1P4 instructions. That allows each partner to get their entitled addition and subtraction modifications from K1Ps that's distributed to the investment partnership from another entity. So that would be a K1P that's received to the entity that in investment partnership. All right. We can move to the next slide, please. So we will be talking about investment partnerships. Oh, there it comes. Um, Investment partnerships, this is updated organizational section on page 21. It reflects Public Act 103, 592 and all of its changes. We're moving away from a fixed place of business sourcing standard. The new definition expands the list of qualifying assets to include certain partnership interest, so that venture capital and private equity funds can qualify as investment partnerships. That's been in place for a little bit, but that's how it impacted this year. If we could move on to the next slide, please. Now, that's really all the major changes that's impacted business and withholding. Um, we've we have we actually uh, field several questions in regards to PTE and PTE election. I just was going to go through that one more time with everyone. We have two different types of pass-through entity here. The credits that is paid versus received. Um, this is where pass-through entity is reported. It's reported on Schedule B and D and out to the members on the K1P and T. Move on to the next one, please. And I see in the questions why this moves forward, um, asking how we will react after the Jobs Act ends in December 31st in 2025. Um, uh, I assume there won't be any need for PTE at that point, but that's an assumption here. And we really don't know if it's going to be extended or not federally, depending on the administration. Okay, entities that do not pass through distribute. This is where PTE tax is received. So when it's received, that would come in on your K1P or K1T, and it's distributed proportionally to each individual member on each partnership or small business as it's received to that from that member. And if we can move on to the next slide, please. This is the overall process for 65s and 1120s. There's receive PTE credit. There's what you handle on the return. And as you pay the PTE credit and as you distribute out on your K1Ps to your members. Okay, we'll move forward to the next slide. This is supposed to be like a fancy transition where it turned red. Up at the top here, we'll be talking about receive PTE for the next couple moments. We're the PTE credits received on K1P, line 53, and income worksheet, so we don't have any double taxation. And we move to the next slide, please. So you have your K1P step 7 here. You should only have one or the other PTE credit or pass-through withholding. And I will move on to the next slide and hopefully explain why here. If you have PTE credit coming in and you're paying withholding, normal withholding, then you should be filling out a K1P3 for each of those non-residents. Well, it's almost there. I have it transitioning. On line 17, as soon as you can see it, you'd subtract off the PTE credit out of the non-resident withholding. So you'd only have one or the other. You'd either have remaining PTE credit, which would go out to your individual members, or you would just have a reduced non-resident withholding. All right, we move to the next slide, please. Here we're just showing Schedule B, Section B. Okay. Schedule B, Section B, showing column L, which is the proportional share of PTE credit, where that would be reported by each member. All right, next slide, please. So moving down to the return on 65s and 1120 STs. 65 and 1120 STs can elect to pay basically all their tax for its members. So this is paying for non-residents and residents alike. And just as a reminder, both S corps and partnership that elects to pay PTE tax must add back the amount that is deducted federally. So if we can move the next slide, please. Okay. So here in the lower half, L and M, and I and J on 1120 ST and 65 respectively is if where you elect to pay your pass-through withholding. L is checkbox to check off if you're going to elect, and L and I, that is, and M and J is if you're going to annualize as well as pay PTE. Next slide, please. All right, here is your add back. On your add back line, it's line 16. for both 1120 and 65s. Just as a note, add back for individuals is reported on Schedule M, line 11. And trust do it automatically. So next line, please. Okay. Here is steps 8 and 9. This is just illustrating that you shouldn't have both pass-through withholding and PTE credit on the same return. A worksheet is included in the instructions to determine what pass-through income is and how to report that on line 60. So if we could move to the next slide, please. As this comes up, this is 1120 income worksheet here. 1120 and the 65 is a little bit different, but both of them have ways to remove income from any PTE or income that has had PTE credit paid on it. Here on line 13, if you have a K1P coming in that has PTE income or PTE credit, you subtract off all the income that's associated with that credit there on line 13. Next slide, please. Here is the 65 income worksheet. You'll see up the top, you have investment partnership accommodations for income worksheet when you select PTE. And you also have line 14 down at the bottom where you subtract off any of that income that's being passed through that's already had PT credit paid on it. Next slide, please. Here we're working through the paid PTE, that is the PTE credit that you're paying on your return or the 1065 or 1120 ST. Move to the next slide, please. Again, here's representation. You should not have anything on 59. You should fill out your worksheet for 60, and then it should just be a direct multiplication there to find what amount that you're going to pay as PTE on 61. Move to the next slide. All right. So a little bit of a change here. Partner share is calculated on a per member basis. We had multiple direct mathematical calculation included in the instructions, which we have removed primarily because of partnerships and their partnership agreements. You can do some strange things with those, including having a partner have a loss for every year. So with that, you have to change to a general process by which a pro rata share is determined by the daily rate. So you go through an entire year and allocate each one of the interest or each one of the income that is by each day of the year and find whatever rate that is or percentage that is. All right, next slide, please. Right here, the only thing really major to note is column K on Schedule B, Section B to report. That's where you report pass-through entity tax that's distributed to partners or shareholders. We go to the next slide, please. All right. Well, there's a circle around line K, just showing you where that is. Moving forward to the next slide, please. So this is, whenever it comes up, Schedule B. It has representation of Section A and B, showing you Schedule K. Each in Schedule K line K on the Schedule B. Section B is the individual reporting of each one of the PT credits that is distributed out to members. On Schedule B, Section A, line 2, just note that income credits and replacement credits go up there online too. So you'll be putting your PTE credits up there along with any replacement credits that you have. Next line, please. Just going on to the K1P process. This is all credits paid and received are added and reported on K1P line 53A. So they're added back together. Next slide, please. Again, we're looking at K1P step 5. We have our PTE add back. It should be on line 33. So we'll move to the next slide. This is K1P step 7. Again, looking at it, this is where we have a lot of our errors. We have pass-through withholding down here on 55. PTE credit should be on 53A. So whenever you have received and paid PTE credit, it should land here on 53A. Next slide, please. Okay, so this is the 1041 process. We'll move on to the next slide because it's exactly the same thing. We'll start with received PT credit as well. It's reported on Schedule D. Then we'll move on to the return itself, go into the K1T3 and K1T. All right, go on to the next slide, please. So we reported on Schedule D. You got Schedule D, Section 1 and 2. It's reported on here on Section 2 or Section B as the members only, and again on Section A as the total. Ooh, next slide, please. Here on their 1041 on trust, they have the unique ability to make a decision on whether to retain or distribute the credits out to their members, retain it for themselves and use it in the payment section. If you go to the next slide, please. Here, this is K1T. This is distributing out. That should be on line 50. Next line, please. So here on 55D, this would be if they're retaining, they are putting it on 55D for their payments. All right, next slide, please. So you subtract the PT share from line 13. Next slide. Again, this is a K1T3. It's the same procedure, just a different line. Line 13 is where if you have any PTE credit, you would subtract it out for any non-resident that needs to be paid withholding on. Next slide, please. Again, we're moving it to the K1T, moving to line 50, it needs to be reported on. Next slide, please. Line 50 here would just be the member's share on their K1T. All right, and finally, final slide for me. Remember how PTE credits received. They received just like any other K1P is received. They're received on the last day of the actual tax year. So as it's received out, apportionment or annualization may be beneficial just to mitigate that bulk income there that may be coming in the last part of the year.